right. So next strategy is potentially the holy grail of trading, smart money concepts, right? Um, so previously we discussed about the trend traders. I really want you guys to practice trend lines, channels, because it's essentially one of the most strong build up liquidity that you can have in inducement trading. Because basically all of the strategies moves by structure. So they're all looking for biases. Biases are built through trends, and trends build liquidity. So I'm telling you, practice multiple buildups over the course of your homework. All right. So let's jump into smart money concept. Back in the day, a couple of years ago, when smart money concept launched, everybody thought that they were trading with the banks, like the banks, and they thought they were smarter than support and resistance trader, trendline traders, and all the other retail strategies, right? But essentially now, trading smart money concept is pretty retail, right? If it's important to notice that if a strategy is public, and then it's targeted by the big boys, right? Why would a bank or a hedge fund manager, or example, the Fed, won't buy or won't get your free course online to learn your strategy, right? If you were able to get the strategy and have access to the course, then everybody can have access to it, right? So if it's the case, then it's going to be liquidity. So what is smart money concept? Traders look for imbalances in the market to get their entries. They use multi-time frame analysis like H4, H1, M15, M5, M1. They even use a 5-second chart. They use specific confluences like psychological number. They use Wyckoff. They use also other retail methods like Fibonacci and stuff like that. They are induced by IC candles, the institutional candles, the one that really pushes and does a big engulfing candle. They're induced by them. Um, so this is how a smart money concept trader trades. He looks for support or demand, depending on what it is. He looks for reaction on it, sometimes a break of structure, and he gets into that PY, point of interest, that order block, that OB, that buy to sell candle, whatever the term is. I call it POI, right? Even with my strategy, I call this a POI because it's a point of interest. So this is where the enter, right? You already saw that. You probably already traded that way. Stop loss usually goes above or of the imbalance. Sometimes some trader put it here, or goes below the support, not the support, the supplier or demand zone. A lot of them take partials. They target psychological level. They target some liquidity. So, example, some traders wanted to target equal highs, equal lows, because they think they know how liquidity works, right? They move their stop loss to break even quickly. Some of them, even when they have a 5 seconds POI with a change of character, whatever you call it, they enter and they go break even quick, right? Because they don't want to hit the stop loss. They use structure as target sometimes. So if there's a bigger structure here, they use this as target. Okay? Now, how does it look like on the chart? You can see it here. They have potentially a break of structure here from the left. There's an imbalance here. There's a push. This is the correct break of structure, and they enter here, right? It's a valid entry. Even I can trade that way. There's also these equal highs here, so price. It's a valid inducement entry, but I'm just giving you an example on the chart. Okay, this is a more logical example for them. Structure here, here, break of structure or change of character, call it whatever you want, and mitigation of that point of interest. Okay. Now, how can we, like we did with the previous strategies, how can we add this to the whole portfolio and curriculum of the strategies we know? Let's see it on the next slide. Here's an example. So here you have the SMC entering, all right? Then price consolidates here, pushes higher, breakout traders entering here, stop loss here, all right? So now, second touch of the trend line, price pushes higher, retest the previous zone here, break and retest entering, third touch of the trend line, stop loss is here. So you can see already everything adding up. Now, price reacts, corrects here, pushes higher, breakout traders entering, going back. Essentially, we could have break and retest traders entering, but I didn't want to confuse you, so I just decided to put the PY here with the SMC. So we have the trendline traders also entering here, and we have the SMC. So we have 3 stop losses because we have people here. All these guys are trailing their stop losses except for the SMC. All right. So it's really important to understand what's happening here. We're building liquidity with 1, 2, 3, 4 strategies already. So this is exactly how liquidity works, and inducement also. So I repeat, this is how liquidity works. It's being built and architectured in a way to be liquidated afterwards, right? So basically, they need to induce traders with entries. So the fact that the price corrects and come back and gives that break in retest trader entry is an inducement, right? People oftentimes keep in their head that an inducement is when they take liquidity. It's part of the whole concept. But if you search on Google, an inducement is to do something, to induce someone to do something, right? So basically, they're building all of these retail entries for retailers to enter. Okay, really important. To master liquidity, you need to master all of the strategies. All right. Now, here's a perfect example again. Here, break of structure, mitigation, boom, entering. Price pushes with engulfing candles, breakout traders entering, stop losses here. Boom, consolidates, comes back, retests this zone, breakout traders entering, but also second touches the trend line. So we have the aggressive people using a trend line entering here. Price pushes higher, consolidates again, but also does this push that led to new high. Does a mini breakout structure, so greedy retail SMC entering here. Third touch of the trend line, another stop loss here, but also a consolidation with a retest here. I know it's pulled by the hair, but I know it looks stupid, but this is the case. This is how they do it. And trust me, I traded that way, so I know it's it's the case. All right. So please look at this and understand how it's always being done at the same time. And notice how I'm only doing the buy side liquidity just so you understand, because we as human understand better when price is moving on the upside, right? It's easier to understand on a graphic. There's also sell side liquidity. I'll show it later on examples, right? Perfect. So this is how the smart money concept works. Now we need to go to the smart money traps. This is interesting. All right. What is an SMT? We call a smart money trader that are trapped by an inducement an SMT. All right, so it's a smart money trap. These are quite tricky to understand when you come from a smart money concept. I was about to say smart money trap. Smart money concept background like I did. When I first learned how to trade inducement trading, it took me about 6 months to transition correctly because I always was making the same exact mistake. And I will help you to forget about how smart money concept thinks and trade like inducement trading. All right. What is a smart money trap? So basically, it's they provide smart money concept with an entry to them, induce them to the high side or low side here, to them liquidate them. All right. You will see better examples when I'm going to be showing you the charts. Now, how do you mix up smart money traps with retail concept? You need to understand that smart money traders are a little bit more aggressive in their style of entry, so sometimes they will be induced and liquidate faster than, example, a trend line, right? Because smart money concept has been there for years, but it's a newer way of trading than, example, support, resistance, trend line, breakouts, right? And like I said earlier in the videos, every trader is essentially a breakout trader because every single trader is looking for a break of structure in the market. All right. So let's see how smart money traps and smart money traders and breakout and break and retest and trend lines and support and resistance are matched together. As you notice, I didn't talk in the previous list of the course, I didn't talk about support and resistance. I think these are two concepts that are super easy to understand, and I don't think I need to go over them. And essentially, a support and resistance trader is also a breakout trader, right? Because he waits for a new low or a new high to be done to enter based on a support or resistance. So I think it's important to understand that I will not go over support and resistance strategy, but I think it's important for you guys to understand. And I will put support and resistance in the next slide. All right. So how do we see smart money trader as a inducement trader? All right. So here you have that POI. This is what we call a decisional POI because it was a push that led to the new low or new high. The difference between this decisional and this extreme is what I just explained. So the extreme is the extreme POI, and this is the decisional because it led to the new low. All right. So we have that POI here leading to the new low. We have that smart money trader, smart money trap reaction. Then we have our inducement into that value mitigation to then liquidate all the entries. Now, I need you to focus and I need you to see the screen how you see it like this. Pause the video and try and see if you're able to see all of the retail concept that we discussed. Try it. If you want to have fun, just pause the video, screenshot the video, and try to like draw on the screen and see it. Okay? Let's start. First and foremost, we see that we have an imbalance here, right? It's harder to see it on the graph, but there's clearly an imbalance. We can see that here price haven't come back into this zone, so this is a retail imbalance, all right? To confirm the smart money trap reaction. Then we have that retail break of structure on the left. You don't see it, but essentially, since it's a decisional POI, you should know that there is a break of structure on the higher time frame or a high time frame structure on the left. All right. Then we have that SMC traders entering here. Okay. Do you see it? What's happening next? Oh, we have breakout traders here entering. Price pushes to the new high. Okay. Can you already see what's happening here? Break and retest traders entering here also. Okay. So basically, from our inducement of the SMT, because they're inducing them to the low side, we're also inducing other traders to the high side. I think your brain is about to explode too. because like I'm telling you, liquidity is on all directions. Please bear with me. We're just starting to dig into concepts now. Once we go into liquidity trading, how we trade it, it's all going to make more sense. So please don't be discouraged. Now, another breakout trader here entering after the inducement. All right. Oh, equal highs. Like I said, all retail equal highs or equal lows, support and resistance are also breakout traders. So for them to enter here, they were waiting for the new low to be done here. So this is why these equal highs are valid. And I put a little star here because since like I told you, we didn't discuss about support and resistance, but it's there. So I still want you to practice it, please. It's going to be also in the homework of this video. Now, because essentially support and resistance are also liquidity points of the smart money traders. Now we have a little sus trend line. It's not super great, but I was about to draw it some like another way, but I think this one was a better example because essentially when you have one touch, two touch, they expect a third touch. And it doesn't mean because a retail strategy works that it works all the time. They need to be induced sometimes, and they would even wait for this retest of this trend line here to retest. So it's still valid. Now we have breakout traders here pushing price lower. Then we have equal lows here confirmed by this breakout here. Then we have break and retest trying to enter here, but being induced to the low side because they wanted to buy to the go higher. We have another breakout trader entering here. We have a break and retest trader here, but being induced by the SMC. So now it's getting even more confusing confusion for them. Now we have other breakout traders here entering. Like, please bear with me. It's gonna all make sense in a minute. Then, where is the liquidity of all these retail concepts? Once you master this, I'm telling you, it will help you so much on the long run. Because here, we have these guys entering. We know their stop losses here, right? We have these guys entering. We know their stop losses here. Now, so this is all of the sell side liquidity. You confirm. So we know that there's no way there's shorts here or there's shorts here because essentially we know that retails are entering there, right? Do you understand what I just said? Here, we know that there's liquidity here and here. Liquidity is the stop losses or the break evens, but let's not go into break evens now like we discussed in the earlier videos. Focus on the stop losses. Look how this does a break of structure to the low side. So traders are looking to trade from here, SMC traders. So this is essentially an SMT, all right? Because there is liquidity here. Same thing as here. This is why this is an SMT. I decided to not put an SMT here because we didn't have a reaction, and this is something else I want to discuss later on, all right? So you can see it here. On the sell side, here's all the liquidity. Now let's go on the buy side. We can see that liquidity on the buy side is being built. Look at the stop losses. Look how price perfectly takes these stop losses. Boom. And here, this is a chart that I've drawn from a real candle chart. Okay? The and to know why the valid mitigation was here, the answer lies on the left because this is what we call an inducement POY. It induced relevant liquidity to the left, so this is why there's a valid reaction out of it. So basically, I will repeat myself. When a POY induces relevant liquidity, it's called an inducement POI. Okay? So I know that all this sounds pretty complex. I understand that it sounds really insane to understand that when you trade, Joe, you have to understand all of these retail concepts to trade, of course. And I know that looking at this seems really overwhelming, but this is what I do on a daily basis. How can you know and like believe that I'm able to enter with a such precise entry without even understanding all these concepts? This is why I'm able to enter and have a perfect entry. Not all the time, sometimes I mess up, but also have a perfect take profit. You need to understand that in some cases, you will have some break evens, you will have some stop losses also, but understanding where liquidity relies is mandatory, right? Please bear with me. Everything will make sense. I know it seems overwhelming, but everything will make sense eventually. Now, we're going to do is jump on the charts, and I'll show you on the charts how it looks like from all what we discussed. So let's recap. Now we have breakout strategies, we have break and retest, we have trend lines, we have support and resistance, and I just added support and resistance. Um, Support and resistance isn't really a strategy itself because it's including in the break and retest strategy, but let's from now on mark it. All right. It was my mistake to probably not put it in the beginning, but even for me, it's not a whole strategy itself. I think that support and resistance and trendline traders are in the same category, and also break and retest. It's all retail concepts. The goal is to understand each of every single one of them. So from now on, I repeat, we will mark equal lows and equal highs, and also we will understand where is the liquidity of all of these strategies. And eventually, we will have to mark all of this liquidity on the charts. And it will all make sense. When I started trading inducement, I was marking all of the stop losses of every single strategy on the charts. I have over 3,000 days marked up of all these retailer strategies. And now today I'm able to see it with my own eyes. I don't mark it anymore because I see liquidity clearly. And this is a level of skill I want you guys to acquire, right? Uh, it's really important. Like even here, I forgot to put the break and retest trader here. There's so much liquidity on all the sides, but I did this pretty quick to just summarize how liquidity is built on both sides, right? Um, so let's jump on the charts. Let's look at it, and then I'll give you guys the tasks to jump and start mastering intraday liquidity. Thanks. All right. So we discussed about SMC and SMTs. Now let's see how it looks like on the charts. Okay. I will do the buy side liquidity first, then I'll do the sell side liquidity because I want you to understand actually how they take liquidity before it's after it's built, because that's actually like reverse engineering procedure. Some of you potentially already know how to use it. So first of all, we have we can see that there's a reaction to a POI here. All right, perfect. We can maybe say that this is a break of structure. So we have the confirmation that we have SMCs entering here. SMC. All right, perfect. I'll do all the entries and then we'll go over with the stop losses. Okay, perfect. Now we have clear breakout traders entering here. So breakout. Okay. Now we can see that there's kind of a consolidation here, like the retail call it. So we can say that we have break and retest traders entering here. Okay, perfect. A break and retest traders entering here. Now let's continue. Price seems to be doing here kind of a trend line. You guys agree? Trend line, it touches here. So let's put trend line here. Trend line. Okay. New breakout traders also entering here. Don't look on the left, all right? Let's focus on here, please. Breakout traders entering here also. Now we have break and retest traders entering here. Let's take this one. Can we argue that there's potentially also some SMC traders entering here? I don't really like it, so let's not say this. But now we have a change of character or a break of structure to the downside for them. Well, this is called a false break of structure. I'm not going to talk about it right now because it's for future videos. So since we see the charts already in hindsight, we know that this, based on the reaction we see, this is an SMT. Okay, so I'll put here POI and here SMT. Okay, perfect. Now we can say that we have equal highs here, even though it's a sell side liquidity, but I'll put it equal highs here. Okay, but we also have break and retest traders entering here. You agree? Let's see if there's something else on this side that we forgot. Here, this is good. It's just unfortunate that we didn't put this one here, but it's okay. Perfect. So you agree that this is everything we have. Potentially we're missing something that is probably pulled by the hair, like breaking retest here, but let's focus on this, okay? Perfect. Now let's go here. We can already see that we have uh, equal highs, equal highs. Now we have, okay, kind of a trend line here. Do you agree? Yes. Um, we have, we can put here breakout traders here, but we also have breakout traders entering here. But we also have break and retest traders entering here. Break and retest traders. Here, there's no, like, we can say that maybe breakout traders are entering here. I'm going to put it just for the sake of it. Okay. Again, breakout traders entering. Okay. Now we have SMC traders. Did I miss some SMC here? No. Because for here the SMC to be valid, it would have need to be doing like a breakout structure and come back here. So for here, we can see that there's some SMC traders entering here. Okay. Here, we can say that this is also SMC traders, right? Because there's the breakout structure here, the BOS here, and it mitigated here. Okay. We don't care. We don't want to enter here, 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 because we need to think like how they enter. Okay. Good. Let's continue. Now we can see that there's potentially, let's say if there's another trend line. No. Is there a trend line here? Oh, it looks a little bit better here. another trend line, right, to the downside. Now, let's see here, break, oh, sorry, break and retest, breakout traders entering here. Now we have SMC traders entering here. You know why? Because there's a break of structure. Um, we can also argue that here we have uh, break and retest traders entering. So I'll put this here, break and retest. It sounds really confusing, I know. I just want to represent and explain to you how they enter and how the liquidity is built. All right, so please bear with me. Okay, now we have breakout traders entering here. Now we could argue potentially there's also break and retest entering here, SMC traders entering here. I'm getting confused even myself. Now there's a consolidation. There's a break to the downside. So maybe there's break and retest traders entering here also. And we can say that there's break SMC traders. Let's put it like this. SMC traders entering here. Let's not go too much complex. I think it's pretty clear. Now let's see if there's some channels we can start building here. This channel looks good. Is there a channel here? It looks less good, but let's adjust it a little bit and see if we can do something better. Oh, that looks good. All right, perfect. Now, let's work and see where the liquidity is. All right, perfect. Stop loss here. I'll go a little bit. I'm going slow so you understand. Usually I do this in 25 seconds. So we have here. We also have here because of that trend line. So we have here because the breakouts are going higher. Now we have break and retest traders selling from here. We also have a second stop loss here because of SMC traders. Okay. Now we have break and retest traders entering here. And we also have that SMC traders entering here, but we also have that trend line here being bounced here. Okay, remember trend line are often the second and third touch. So now we have other SMCs here. SMC again, trend line. Okay, you agree? We also have another stop loss here because of breakout traders here. Now we have another breakout here. It's getting messed up, but it's okay. It's just a visual representation. Now we have SMC traders here. We also have break and retest traders entering here. But now we have the SMC entering here, but also the breakout traders. So a second one here. Now we have here trend line also. Third touch here, here for the SMC, also for the equal highs. Are you starting to see it? Okay, perfect. Now, let me drink a sip of water and let's start. I want you to look at each, at each and every single stop losses, how they perfectly match with engulfing candles. Do you see it? Look at this. Look how it perfectly matches with all spikes on the left. Here we go. Do you see it? Look how beautiful. All this liquidity perfectly touching these engulfing candles. This one also. Full candle here. Full candle here. Do you see it? Right? Let's continue here. here, here. Do you see it? On the left. Perfect. I have been doing this for at least 10,000 plus hours, and I still am fascinated on how liquidity works. Look at this beauty. Each and every single stop losses are being hit perfectly by engulfing candles. I think there's probably these ones here, and I think the stop loss would be here. So the candle was engulfed at one time, right? Look at this. Isn't it fascinating? Your goal as an inducement trader is to understand where retail traders enter and where retail traders get stopped out. Okay? And we can do the same exact thing for the opposite day with all the liquidity on this side. I want you to look at this. What do you see? Isn't it beautiful, right?